Good morning, everyone. Welcome to our part 3 of our 5-part series on artificial intelligence. I am Michael Tannenhouse, CEO of Mavenspire, and today we're going to be talking about the cost of AI. Now, the reason we're talking about cost is one of the things about any kind of revolutionary trend or hype cycle thing is that you tend to see the big enterprise throw some big investments at it. You tend to see excitement and a news cycle where no one will talk about anything other than AI. It was like that for cloud. It was like that for digital transformation and modernization and so many and innovation, so many different things that have come around. They're all sort of the same thing, though, when you look at them. There's the potential to change the way business is done, the way organizations work within and without, and it can be amazing or not. And so when we talk about the cost of AI, we're also trying to help people to understand that it's okay to try. Like the hype isn't all hype. Like this can actually be very valuable stuff. And just like in the first two episodes of this series, we talked about setting, a small goal that you can match. We talked about who should be at the table and making sure the whole organization has a voice. In this one, we want to set some clear guidelines on budgeting, with all of those previous contextual things being part of the conversation. So the first thing I just want to cover is that we wrote this content for the mid-market. And the reason we did that is that the enterprise, by and large, has their own plans for how they're going to go about AI. And usually they have teams of people to go about doing it. The super small businesses, they can do some of what we're going to talk about today. Sometimes they just don't have the resources to reach to like platform AI. That will change over time. All technology innovations start big and then they get pulled down lower and lower in the market. So for right now, we've set this content up for company. Oh, by the way, the definition of is not the same in countries talking about the mid-market. So the pseudo-official definition talks about the revenue size of a company and the number of employees. That pseudo-official is somewhere between $10 million and $1 billion annually, with somewhere between 100 and 2,000 employees. Now, alternate definitions have brought that down as low as 5 million in revenue, as low as 50 employees, and up to 5,000 employees. So what you should know about the mid-market really is it's a lot of organizations, businesses, from ones that might only have a few people to ones that have a lot of people, a lot of resources, and in all sorts of different verticals. There's a huge difference between a medium-sized law firm and how many employees it has versus, say, a medium-sized manufacturing firm that has people on a manufacturing line as well as office staff. The same is true in biotech, and down and down and down throughout all sorts of verticals. So also the mid-market tends to be kind of growth engine size of business. They are usually the ones that grow and they get acquired by bigger businesses. They are the ones that have sort of a sort of an aggressive competition, sort of making their way, differentiating in the market. And they have, usually they're a little more organized in terms of organizational structures. Smaller businesses tend to not have as defined hierarchies. The mid-market tends to have some hierarchy, depending on whether you're the lower mid or the upper mid-market. And again, they're all over the place. So if you want to, so clear reasons why we're talking about the mid-market, why are we writing content for that? The mid-market is a third of the US private economy. It's 48 million people being employed in the mid-market. So it's a lot of people and a lot of the US economy. There are a lot of, and when you think about it, if the mid-market with their sizes of revenue are a third the U.S. economy, there are just a lot of mid-market organizations. There's a truckload of them, or multiple truckloads, I guess. Mid-market organizations tend to have less capital, like free-flowing capital, to try new things. There's multiple 80-20 rules in the land, but the one I'm speaking of in this moment is that generally organizations budget 80% of their money to keep the lights on and 20% for innovation. Last couple of tech sort of revolutions have been about flipping the script and trying to get 20% of your resources just keeping the lights on, while 80% move into innovation. AI is not really any different in that it's the same script. We're trying to do things differently, so we're trying to reallocate budget to be able to innovate with artificial intelligence. So in the mid-market, you have to make some strategic bets. You're not going to get to do everything and see what sticks. And so budgeting and understanding how to budget for AI may determine how many of those projects you get to try in the next 6 to 10 months. Mid-market, because they're doing strategic investments, are very, very focused on value return and green dollar return. And so AI can be transformational, but you have to be very clear about what it's going to gain you to get traction in the mid-market, particularly in budgeting. So that, I think, is why we chose the mid-market to talk about. It's really big, it's very diverse, it needs to be very targeted, they're going to have a lower ceiling in terms of how much they want to spend on an unproven thing. So all of these things are true. Now, if you were here in our first session, Mavenspire talked about how we sort of frame the AI opportunity with 3 kinds of AI. It's like 3 different storylines. We have the personal productivity enhancing AI, we have the application integrated AI, and then we have the platform AI solutions. They're kind of straightforward, and you can go watch on YouTube the detailed explanation. But it's all about what you're going to get out of it. Keeping in mind that the platform one takes business pain points and operational problems and deal with them with agentic AI. Okay, with that context in mind, let's talk about budgeting for personal productivity AI. So there are a ton of solutions in this space. This is probably one of the biggest VC races out there right now to try to make the perfect productivity solution. And it's been going on for a couple of years at this point. And so there's a diverse number of solutions out there, but they do seem to range somewhere between $20 and $50 a month per person. Whether or not you're in a team or whether you're just a single person, it's the same. Obviously, when you buy more licenses of something, people give you discounts, so there's some variation there. Keeping in mind right now, though, that people are building out personal productivity solutions, sometimes they're not the whole thing. They're not all of one solution to solve them all. And the reason for that is nobody knows how to build one solution that solves everything for every person. And so you have to watch from a budgeting point of view on personal productivity, the fact that you may have to stack 2 or 3 of these things to actually get to the goal that you're aiming for, which means from a budgeting point of view, you can't just budget 1. You're going to probably have to budget, on average, 3 of them. So you're getting pretty close to that $100 a user per month sort of AI budget, which can be a lot, but also keep in mind that as you go through your organization and you have different roles of people and different needs, your very focused pain or outcome that you're looking for may not apply to everyone. It may only apply to different groups of people. And so you may be doing different levels of stacking, but they might be different stacks for sales and marketing versus operations versus finance. So do keep that in mind. Bottom line here is that the goal of personal productivity across the board to return time to people, to save time. That is their job. If you look at the marketing of all the AI solutions out there, they talk about saving 25% of your time or doing 25% more productivity. They're all using numbers around 25 to 30, sometimes 40%, because they're literally looking for the tasks that are the reoccurring, they take up all your time tasks and just making them go away, freeing you to spend your time on the high value tasks. That's the target. So if it takes 2 or 3 things to get you there, as long as you're hitting the target, it's fine. But if you're not hitting the target, again, you should be weeding through your stack. There is a lot of sprawl in personal productivity. It's very tempting to try the shiny new toy, and you should have some method to try the new thing to see if it's better. Just, you want to control the shadow AI on this side, or you'll end up with people overloaded by tools. Tool sprawl takes up time in its own right, so you need to control that. But somewhere between $100 per employee as a budgeting number, or going through the 20 to 50 per employee per thing, should be able to put together a budget. Again, focusing on what is the outcome you're going to get from that. So when you do something with AI, whether that is application integrated or personal productivity or even AI platforms, just make sure you remember integration. Like, someone has to make sure the thing works out of the box. Sometimes it's easy, sometimes it's not. In the case of application integrated AI, the second category that we were talking about, and budgeting, you definitely have the software cost. Now, sometimes that's nothing, right? Like, for example, Canva requires that you be on a team subscription to get the full AI feature set. But if you're on free Canva, that means you're taking a monthly bill. If you're already on a paid Canva, that only might be $5 more per month. Oracle NetSuite, which I think we all agree we expect to pay for extra features because of just how their pricing model works, added their first generation AI features at no cost. They're agentic, and they're very specifically about accelerating tasks versus trying to do some kind of big, overwhelming platform. And so they did them at no cost to see how much value they could return. In general, we tell people that integration and development, you should definitely be planning for who's going to train the people, who's going to set the thing up, who's going to get your time to value down very tiny, right? Because you don't want to be theoretically good. You want to be able to say, this is the project we're doing, this is the goal of the project, these are the tools that are making the project happen, and this is the timeline to having it rolled out. And then you're going to want evaluation periods, potentially even sprints, if it's a bigger thing where you have multi-phases of it. And you're going to need consultants to make the friction, the frustration, all very manageable. Don't forget also in budgeting for application integrated AI or even AI platforms, you're going to need ongoing maintenance and training. Things change over time. Human adults need to be reminded every 90 or so days. You're going to need to have a way for the thing to continue to function in the way you expect over time. AI managed services is actually a relatively new thing that's just coming to be, where you can have the maintenance of AI be someone else's problem, so you can just focus on enjoying the benefits of it. All right, so AI platforms. So this is the one everyone fears the most, and rightfully so, right? These are the ones where bigger numbers come out, right? And in platform AI, there's really, 2 parts. There's the software cost of platform AI, and then the hardware expense of platform AI. In general, enterprise-grade AI platforms, like the ones from NVIDIA or Dataku or UiPath, they're going to have a way to get in somewhere around $50,000 a year. This is not meant for production scale, but rather for you to have some way to build out and test some prototypes. When that scales, you'll probably see that bill increase to somewhere over $200,000. Again, it depends totally on the scale. I do know of some organizations where what they call at scale and what other people call pilot are the same thing. And so they get to stay with that introductory price all the way through. And I know other people who want to test it, and if it's good, they want to roll it out across a couple hundred people, maybe even more. And they tend to hit the higher side of the range. But in either case, you have the software side, And then you have the hardware base that has to run it. In the lower scale side, you're going to be able to use like single server designs for prototyping. But keep in mind that most servers that are set up to run AI, like LLMs or platforms that use multiple at the same time, that cost of server is going to be somewhere north of 75K in general. Why? Because the hardware that it takes to make AI work at the speed where it's actually talking to you in real time or chatting with you in real time is significantly more than what you would expect out of a computer in front of you, or even a virtualization host historically. Like it takes a lot more to grind. When you hear on the news that people say we're going to run out of power just to power AI in the data centers, it's because that compute resource grind is so much more that the power draw is so much more. So when you actually want to do the hardware platform at scale, expect an entry level of around $750,000 if you were doing a capital purchase. Now, obviously, doing something in cloud or aligning to an OpEx model or using a utility model like Dell Apex, there are all sorts of ways where you can not have to stroke a single check and break that out over time. But you just need to understand that the stuff this runs on is kind of chunky, and so it has a cost factor. So in terms of taking a moment to understand the business case for AI and maximizing those returns, most important thing is to have very clear goals on the outset. If you have the objectives you're trying to reach and why you're using AI and what you hope to get from it, and you have clear KPIs from that, you can really tell whether something is driving your business or it's just adding a layer of complexity and frustration for people. It's always better to start small and scale something that's working. It's really hard to kill stuff that isn't maybe exactly on target. Like it's hard for us to let go of things. But truthfully, that's the name of this game. If something works a little bit but is not squarely on, then you should you should move on. You should terminate that project and move on to ones that are squarely hitting the way you want. And finally, you want to make sure that when you're doing budget allocations for AI, normally what people do is they have multiple projects, multiple AI projects. It really is important to prioritize them. Being able to show the business and show the greatest return, the low-hanging fruit sort of thing, really does help in continuing to get investment and continuous improvement. If you've ever worked in anywhere in DevOps where you're just trying to make a little bit of change for the positive every single day, like that's the way you should prioritize the budget. Which one is going to deliver on that? So I wanted to give everyone a quick scenario, just to kind of like I understand this has been sort of theoretical, right? With some numbers, but let's pull it all together. So let's just take one scenario. So let's say you have a sales organization, and the goal that has been set by the organization, probably the board or the C-level, is to do a 20% increase in revenue per month without adding headcount. So with no extra people, how do I raise my quotas 20% and deliver on them? By the way, is not necessarily an outrageous or unheard of request. It's actually pretty conservative. So, so stipulating that today in this organization that we're theoretically doing this with, they have a 5-person sales team. When we're looking at what are the potentials for AI here, scheduling agents, so something that takes care of scheduling appointments or getting in touch with people. AI is built in, like integrated into the CRM that are looking for white space or opportunities and current accounts, looking at how inactive accounts are talking and how to nurture them. So reaching out to them and trying to bring them back to active conversations. Automating the record keeping to drive more phone time. So in the sales organization, we have potentially expense reports and trip reports and generating proposals, and like there's certain tasks that are more operational in nature that you can pull back into AI and free the frontline sales folks to be doing more of the core selling tasks that they, a human, have to do. So, and then of course, I guess I already mentioned it, but following up on proposals, actually, that's a big one. Sometimes we'll send a proposal out and someone will get busy and it will get lost. Just having something that follows up for us, would be amazing, just to check on people. But imagine that would be a way to get hours back into the sales day. So we jump over to the right side of the slide, doing the math, right? So I looked at a combination of personal productivity AI plus application integrated AI plus, I don't think in this case we needed an actual AI platform, but I did leave budget in for being able to use AI as a service to be able to bring in an agentic caller, like someone who actually can answer the phone and call people. And came up with a monthly budget of $3,625, low scale, right? With $20,000 in setup and tuning built in for a first 12-month annual cost of $63,500. So the real question, is it worth it, right? The goal was to drive a 20% increase. The AI side of this is projected to cost about $63,500 in the first 12 months. Is it worth it? Well, so I made up some numbers here just to be able to work the math. But let's assume the same organization only had an existing quota of like 40,000 a month in revenue. So the 20% increase would be $8,000 a month additional. There's always a question of, hey, when they gave you the goal, did they say that would be compounding quarterly or something, or is it only off the first number? But if I do actually do it on a quarterly basis, I keep raising it another 20% quarter over quarter. The annual increase in revenue, it comes to just around 100 grand. So for 100 grand more a year, I have this cost of $63,500. So that begs the key question: what is the margin? So if you're running a business where your margins are like 10% at these numbers, first of all, I don't think you're affording a 5-person sales team, but you can see why that wouldn't make any sense. But if you're a services business and 100% is your margin, effectively, then getting an extra 100K for $63,000 in the first year, knowing that it's going to go down because you don't have the consulting necessarily in the second year, is actually not a terrible deal on a multi-year ROI. But I would also note that, a lot of businesses are bigger than this, or have different numbers than this, or different verticals have different numbers than this. If you add a zero to everything, so instead of 40,000 a month, it's 400,000 a month, or instead of it being 8,000 a month, it's 80,000 a month, right? Just straight adding a zero all the way down, you can see that suddenly it makes way more sense. So that's where the scale of your business in the mid-market, whether the lower mid or the higher mid or the middle mid, can make a big difference on whether something makes sense or not. So knowing your margin is really great, but as you keep growing, especially as it compounds, don't be afraid to do a project where you have a test phase to make sure it's working. And then part of the scaling factor is multi-year, right? This thing gets better every year. So we're going to keep running with it and watch the results get better and better and better from a budgeting point of view. All right, so now we have a kind of understanding of what the magnitude of something might be, right? Our example was $63,500. Some of the AI platform stuff is in the hundreds of thousands of dollars, maybe even millions, depending on the scale in which you're operating. So let's talk about, once you've set the budget, built the business plan, understood the value it's going to be, let's go back to how does somebody pay for it in the mid-market. So this comes up decently often. And by the way, I would absolutely suggest that you involve your CFO or whoever the chief financial sort of resources into these conversations, because generally they make your life a lot easier. They already know how to do this. So It is not a new skill for them to figure out how to pay for investments. They've got it. So they can simplify this conversation greatly and even give you the KPIs and metrics they have to live under so you can understand what is acceptable and what is not. But I will say that CapEx versus OpEx is usually a choice. Some organizations really prefer CapEx, capital expenses, and some like to align to operational expenses. OpEx offers the flexibility of aligning your income to your expenses. So if you're paying a bill based on how much you're earning, then that is great, right? Because you're just a percentage of profit that you're a cost against. And by the way, you don't have to be in the cloud to get that monthly utility type model. There are many, many programs to do this in colocation or on-prem. So if the costs of doing it in the cloud versus on-prem are 2 or 3 times, which would not be unusual these days, you should be looking at programs like Dell Apex, where you can literally take the capital expense and make it into a utility model where you're paying for what you're using, even if the thing is sitting in your data center. Don't forget about financing. Financing has been the historic tool of the mid-market to enable access. It allows you to effectively spread a payment out. So for those organizations that like to capitalize, if you're doing an investment with hardware and software and you're paying for that with 3 years of warranty and 3 years of subscription up front, it will be relatively easy to get financing put on at a competitive interest rate that spreads the whole thing out 3 years or even 5 years, depending on what you need, to make it affordable. So at this point, what we found is there is, particularly if there's an already vetted sort of prototype where we've proven the concept and now it's just time to scale it. It's usually been a great return on investment for an organization to be able to pull in some financing or some Apex kind of financing to be able to bring this as a multi-year deal. So I hope this has been useful. Today we've talked about what should you be budgeting for personal productivity, for application integrated, don't forget the consultants and what some of those costs might look like. And we also have talked about what AI platforms might do. And I'll just leave you with the final thought of focus on the problem, not the solution, and you will find your way through. Thanks, everyone. Have a wonderful day.